Good morning, buyers. This is Gil. Um, for another trading week, the last one for November. So let's. We have a lot of visitors today because we invited people that had signed up for our newsletter, so they can see what we're doing every morning. There are also people invited that were interested uh, to engage with us in the past. So you can also have a peek of what's going on. And of course, we have our loyal traders with us as well. Just give me a sign in the Q&A if you hear me all right, so we can begin and work out the analysis for the majors. All right. Okay, so audio is okay. Let's start. Obviously, we would just start with the Euro US dollar. Most of our analysis from the past week is still valid. Um, and we see price is declining pretty much hard um, to the base um, of the uptrend pole that could not actually um, defeat the sellers around 1.1092. Um, that significant. This show us that we still on the downtrend, the main downtrend, and but yet we still have some demand that if we are thinking of selling, um, we should reach out for higher supplies to sell. We can also see that this demand, the one at 1 point, let's call it 1.1, is which is a psychological level, was already rejecting price twice, once after it was created, and then further later on. Um, and we can expect that this demand is somewhat consumed, and we should be very, very careful um, if we would like to buy at this level. However, um, my trade plan would be to wait for price to reach higher to 1.11, and from that to look for a sell. We see two fresh supplies waiting up there to sell from. We also have a good target for price to go, which is 1.096. And from that on, we have a few more demands, but mostly this area is mostly consumed. We can see that we have here a fresh supply somehow, which is rejected by this uh, compression area. So we'll have this compression area also as a barrier, and the lowest will be as well. So these are the levels for the Euro US dollar. We're looking to sell because we want to work with the main bias, the long time frame bias. We still are going to have some tactical moves. So if you're intraday, you can buy at these levels below. And so this is the Euro US dollar. Okay, next we got the cable. The cable was pretty neat. Um, Last week we drew this level. We drew this level at this demand supply at 1.2983, and the same day we created that level, price was rejected by the pip on it, ever since creating 154 pips downtrend. This morning it opened with a minor gap. It was already filled, the gap, so price is probably it's breaking its high. So today we can expect some highs in the intra levels. Here we're going to have some rejection. We need to go into um, lower time frame like M5 to see where actually we can sell, where we can find a fresh supply right here and at the 128.90s, and the next step will be around 129.20s. These are the levels for supply that price is aiming for. Um, as we look on the with the on the higher time frame, we can see that price is reaching into a zone that will provide a lot of resistance. So we expect price to penetrate this zone in order to um, consume it and continue for higher levels. But um, to penetrate this area is going to be a lot of casualties. It's going to be a war in it. So um, try if price penetrating this area between the 1.2980s to 1.3390s, around these area, look only for intraday levels, because it's going to take a while to penetrate this. Once it's penetrate this, we're going to have this compression moving up pretty much smoothly all the way up to 3600, and then there is this liquidity gap. Then price should be easier on going all the way to the 1.40s. This is on the weekly time frame, which is a very high time frame in my opinion. So this is the main bias at the moment. We still on the lower time, on the higher time frame. We're still on downtrend. So beware, but the range for the downtrend is still valid. We're not hitting it just yet. So there is room to grow, and there's also room to break the trend. Like this happened, that the trend line was broken and violated. This is also a signal to us that maybe the downtrend is somehow being blocked, and we should be um, releasing that downtrend bias in our mind. We cannot be sure. We should wait for more conviction. So one conviction can be that if price will go all the way up here, then we can pretty much be assured that the downtrend is ending. But like I said, we are very far away from here, like almost 1200 pips away. That's a long distance to achieve. So next week will tell us. So what we're actually looking for are uh, intraday levels for the cable. Nothing more than that, because we cannot join the main bias for the next few weeks. So be only tactical with the cable. Um, so we've seen that the liquidity, the gap was already closed, so we've missed that trade. We have compression all down here below. So, and the compression and price actually already penetrated the compression area. So if price will go to around these levels, let's draw it as a demand to these levels, then price may go much lower to the next barrier at 28.12. And then from that on, it's free to go lower to around 12 127.80s and 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 to these demands. So let's see how price reacts. If it goes down, if it's been rejected hard enough from this supply up, um, then these will be the target areas. So all these areas can be targets to exit or to enter, to switch, to flip your positions from sells to buy, and all these areas are the ones to sell from. There are more up here, and there's more compression around here. So these are the levels to mind for the cable. For the new people around here, I'll just give a brief how we do our analysis. Our analysis is are based on supply and demand order flow analysis and including some advanced price action methods. If you want to learn more about how we do our analysis with the 5ers analysis team, you can go to our YouTube channel. I'll bring it up for you. You can go to our YouTube channel, which look like this, and in the videos we have these four series of four webinars that we've created 2 years ago, which are still valid and working very fine, and it explains the theory and the reason why it's working, and everything that you need to learn to look at the chart as a narrative uh, for the war between the buyers and the sellers. Try to understand what's going on, who are the participants, the big players, the institutionals, the retail players, the stop hunting. Everything can be told on the naked charts, and we teach that on these four webinars. Not as in depth as you would want, but a lot of theory, a lot of understanding what's going on and how to look at the naked chart and actually see what's going on. Where are the orders hiding, and where is the higher probability to enter or to exit your trades? Webinars will give you a lot of information about this. Um, and so far, the reviews we get on these webinars are super. This is why we keep them for years now on our channel. Uh, so um, go there if you want and learn. So let's continue analyzing the Japanese yen. The Japanese yen is bias is also similar to the cable. The trend line of the downtrend is pretty much broken, and we can see recovery for the down move. So we cannot really predict if the longer time frame is um, uh, short or long. We also on the weekly we can see that it's a huge pan formation that we still need to continue after retesting hires and being holded by high time frame demand. So we are currently on the Japanese yen on the lower long time frame. We are looking for some conviction of price to tell us where it is heading next. So we cannot really have any good bias to ride with. So that tells us that we can only trade intraday levels for Japanese yen. So intraday levels are around um, the supply price is aiming for that supply is pretty much with a lot of force based on uh, from demand. So we'll expect that around the 190s price will be rejected, but it's only going to be an intraday minor retracement, technical one. It will not, I don't think it will actually reverse price. So we see there's a lot of accumulation down below, and this level is, I suspect, can be possibly broken very soon. First reaction it will create because there is a huge reaction, very powerful reaction here. But we see that although we received a huge reaction, the reaction has two things that is not making it a very powerful one. First, it was rejected from a very legit uh, supply from above. It's a reaction of a supply above, and this tells us, and this was expected. Second thing, when we see a very strong push down, the conviction was very, very strong considering the other ones we've seen. It still didn't achieve any significant breaking. So we can see here that price was actually holded on the next major demand. So this supply is not strong by its conviction. We always test the effort is the result, and we can see that the result was that price was blocked on the next demand. That tells us that the effort was not sufficient enough. Therefore, we cannot, we don't see any strong supply in this area. It still will reject because there are some leftovers orders here for sure, at least for the first test. We can also see this little kink here. Let's, you can see this little kink here rejected by the lows here. We can assume that there are some supply orders waiting to be executed. So, but it will be, I assume, and still, don't take my words. I don't. My assumption is that I don't know anything. I'll let price telling me and show me its cards when it's there. But my assumption is that it will not be strong enough. It will be broken after one or two tests for most. So this is what I expect. And of course, we see a lot of accumulation here, and we see prices rejected by demand, checking out, taking, being loading demands that everything is up there. So this area was taking all demands that was possible, and so price is free to go higher highs. So that's what I think about the Japanese yen versus the US dollar. Next thing, Kiwi. Kiwi is still has a lower downtrend, but uh, we are in a good levels to try to join some down moves. You can see that all along price is retesting lower lows, and for whatever price is doing, you cannot really break any significant uh, supply in its way. So again, uh, versus result, we can see that price is not breaking higher supplies. So we assume that more supply power is on hand, and we would want to join it. If you go to intraday on H1, we can see price is being blocked by supply up here. It was tested a few times. Price is still have some strength up, consuming these this supply. There are more supplies to consume, and I assume that once we reach these levels, price will strongly be pushed downward to take more demand lower and maybe reach to lower demand. On If we go to M15, we can see a lot of fresh supply and fresh demands on below, depending on where price would go. Um, um, just a side note, if although we have a main bias on for the high time frame, if we do trade intraday levels, um, usually it doesn't really matter because when we trade price action, we look at price and we try to catch a minor moves. We're not trying to take advantage of the whole big moves. So um, in my style, I would want to be flat at the end of the day, if that's possible, is to lock my risk with stop loss beyond break even and give a take profit and go to sleep and see what during the night after my shift. But here we can see that all these levels can work out for either highs or low on the intraday perspective. So there are a lot of fresh demands if price would go down here and wants to be loaded before it takes the high supply, or if it takes the supply before it takes these, then these would be great short entries. Anyway, I would want to this whole structure to be convicted if it goes higher or lowers, and then I'll decide where to enter. And if price would be going lowers before it going to the highest level, then I would buy, and these will be my target, and vice versa. So this is how I look at things. We do have a very strong demand around the 0.63375, which is of a very, very hard spike, but it did break and did consume this whole compressed area, and taking some more rejected on a very legitimate supply, and then price was retracing, not back to the origin, broken the spike high, and it's reaching higher highs. So this is why I'm thinking on the intraday, um, price would go first for the highs and then for the lows. So sell here, exit around here, maybe flip your orders. Depends on what price would show you. Okay, so we got an time for one more. The Looney, sorry, the Aussie. Let's do the Aussie. Okay, Aussie on the higher time frame. I gotta correct this. On the higher time frame, we see um, price is downtrending. It's still on the downtrend channel. We can see that price is obeying this channel um, more or less. So we're still on the downtrend, and let's see how we can join up the party. So price is reaching up. Uh, um, and let's see what's laying out here. So price is reaching out, creating supplies all the way. These supply, a lot of fresh supplies are waiting. A lot of compression um, in the its way down, and now we're on a consolidation area where price still want to convict. I would think that price could fake out to 0.6863 zone. Um, if it will penetrate above this whole area is consumed, so price is very likely to go to the next level at 68.74. Um, so um, the the trade that I would try to do is to take a risk around here to sell. If price will penetrate this whole area, then I will exit. I'll take my loss around here, and maybe I'll flip and switch my trade to buy all the way up to um, 0.6850. At 50, I will try to sell again, risking um, risking all the way to 68.87. If price will go, I'll take it, and then next level will be around 60 0.666900. That would be the next one. So I would always try to sell at the lower supply areas because I want to join the high time frame bias. Um, I would risk as much as the zone um, show me, and then if it penetrate, I will look for retracements to buy for the next level. So that this will be my intraday um, trades. So I would risk, and if I see it's not working, I will flip it on a retracement back to see that this supply is turned to demand and will go for. Um, this is what I'm showing you here. It's not a trade that I will take because of its risk reward ratio is very, very low. Um, but this trade would be it. If price penetrate the compression zone, I would wait for a retracement, see that supply turn to demand, and would buy here. And I have here like I think 2 or 2.5 risk reward ratio. Um, no, I got even more. I got if that's the risk, I got a lot of maybe 6. risk unit um, for the potential that we have here. So um, that is my OZ. Um, that is my OZ trade plan for the intraday levels. Um, and so this is our 30 minutes just passed. So we'll end up here. Tomorrow we'll also do the Looney. If you have any quick questions, just ask now. We'll dedicate like 5 minutes for some questions. And if not, this video will be published in our YouTube a few hours from now, so you can review whatever we were discussing. Um, so thank you for joining up. Thank you for all the guests that joined up. Um, and we'll see you tomorrow. If you are one among the guests that wants to participate in these morning sessions, please write us an email and we will uh, include you every now and then into our morning sessions again. Um, so you are most welcome and invited to come. Um, one more thing, if anyone among our traders, the 5ers traders that wish to present their own morning analysis, you are more than welcome. Also, write us an email and we'll set up a session that you'll be leading. We pretty much encouraging you to take a lead and showcase your analysis and share it with the community. That can be um, awesome tradition. So thank you so much for joining us today, and we'll probably see you tomorrow. Have a great trading day. Bye bye.